Good morning. It's Wednesday, July 10th, about 6 a.m. Central Time. Overnight, the precious metals are slightly higher after yesterday's flat but positive session. In my opinion, the market needed a session like that for two reasons. One, the market consolidated, allowing traders to catch their breath. Let's be honest, trading volatility is fun, but having a crazy girlfriend named Silver driving you up the wall with $1.20 moves every day is not suitable for one's mental health. Which brings up a very important point. From the May 31st peak until the June 10th washout, silver had maintained about a $1.25 average true range. Since then, that average true range has declined to about 75 cents per day. That's quite healthy. Now, number two, both gold and silver survived Jerome Powell's first part of his testimony. 3/4 of the questions that were asked were complete garbage in my opinion, but 1/4 was quite relative. He did take a very hard stance, as he will on inflation, and as the testimony comes to an end, I believe that he will give traders a hint of that first interest rate cut. My gut instinct, my trader gut instinct tells me he's not going to cut just out of a courtesy. It's got to be something substantial. It's either got to be a collapse in inflation or a crisis in the economy. Now, addressing inflation, I think you forget the grocery store. I mean, those companies, they need to make a profit. And some of the commodities out there have definitely come down. Look at the eggs, for instance, and which make up a large part of our grocery bills. The farmer right now, with prices selling off, is borderline on edge. I mean, corn, soybeans, wheat, they've all come down substantially. You move over to energy. I had 3 television requests to cover the hurricane coming through in the last 48 hours and its impact on crude oil, gasoline, and natural gas. Now, as it headed the way, we've moved off and the hurricane is in the Midwest. It's actually providing rainfall for some of these agricultural products that was quite necessary at the moment. But when you get those kind of requests as it's peaking, as it's over those energy prices, and as energy prices have peaked, generally that tends to mark a top in the market. So since then, crude oil prices have declined. Now, addressing the economic crisis aspect of it, we really have to keep an eye on labor data. I think that's where the government is really massaging the numbers. They're trying to boost those numbers, but the reality is, I think we're seeing cracks in the labor market. And it reminds me that, when it comes to natural disasters, in my experience, I've done this for over 20 years, and most of the price movement is in anticipation of the event. So getting back to trading mentality, you go to natural gas when it's cold and inventories are drawing down, futures begin to rally. That's when you really want to start adding those positions on. You use the minis, you use the micros, you buy multiple option contracts. Then you see the word polar vortex covering natural gas. That's spewed out of every reporter's mouth. People are really piling into the market. That's precisely when, from a trader's edge, you want to sell 1/3 of your position. You want to speculate on the top of the second third. And when a reporter calls me, 3-4 times to cover the market, that's when you really want to sell probably 1/3 of your position. And then you'll hold the last third of your position for your entry point as it comes down, as it makes that standard deviation curve. You want to cut it before it starts to go in the red on you. So, when a reporter calls me to cover the market here, that's kind of when I start to get that hint that we might be reaching a top. So if you see me on Bloomberg, CNBC, and Fox Business, all within a 48-hour period covering the silver market, going back like in 2011, that generally marks the top on the market. So you're going to want to look at those types of things, those types of hysteria and events. We just had that with Bitcoin. We had that a little bit with silver. We've had that just recently with crude oil prices. That's when things really get overheated, especially with the speculation in the market. So one last thing, I was looking at that Chinese consumer price inflation data for June. It really missed expectations. The producer prices aligned with forecasts, and basically the data didn't move the markets here. So today we're going to see Fed Chairman Jerome Powell. He's going to speak, getting into gold and silver. You still want to if you're going to go into that market, your critical level support, 50-day moving average, 2361. Second major, now the line in the sand kind of coming up here, 23.24, breakout point 2400, and you go into the silver market. It is holding that bullish trend. We are consolidating with kind of a flaggish pennant pattern. I think that your critical level support is going to be about Friday's low, last Friday's low. Below that's going to be 29.96. Below that, the line in the sand 29.38. I think you wait, you see if you get a breakout to the upside about 31.79. That's kind of your breakout point here on the silver market. You got any questions? Give me a call. Jerome Powell again talking at 9 a.m. Central Time. I did go a little bit into kind of some of the trading style that I use over here as far as adding multiple positions on, trying to take some off here, and then trying to speculate and hold on the other third. You got any questions on that? Give me a buzz, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.